Okay, we're going to go ahead and actually get started. We do this quarterly. As you can tell, it's not incredibly formal. There's a lot of data to go through. I move through things pretty quickly. Please use the Q&A to drop in any questions that you might have along the way. And I'll look forward to digging in on those as we go through. And I'll try to save some time at the end as well. Just so that you are aware, we are live tweeting this. So if you want to use the hashtag, if you're interested in sharing anything, WorkTech VC update, and the account that's being used for really everything WorkTech and all of the data and sharing things moving forward is the One WorkTech account. Okay, so let's go ahead and get into the quarter. What a quarter! There are a few charts, and this is one of them that just tell the story. Was there a global pandemic? Was the world slowing down for the last 18 months because WorkTech investors didn't seem to get the memo? This Q2 being the biggest quarter ever, ending, June 30th with what we've tracked at 4.9 billion across 91 deals. Interesting thing about the 91 deals is it happens to be, and I've, with a fine tooth comb, gone through and made sure that it's the exact number of deals that came in Q1, which was previously the biggest quarter ever. But you can see the average deal size spiked, right? So same number of deals and about 2 billion more in investments. So deals are getting larger. The average deal size in Q2 was over 50 million, which is big for an average deal size. We've been running I've been tracking this since Q1 2017, and the average deals go 20 to 30 million. So it's an incredible jump. And we'll get into some of why that might have happened. So yeah, just an incredible Q2. This is another chart. This breaks down annually since 2017. It looks at the color codes are quarters. So that's the other thing to remember as we look at 2021 is already at 7.6 billion in the first half. The biggest year we've had in VC investment, and it's only half over. There's no sign of things slowing down. We can debate, whether there's a bubble or where we are in the bubble or when the bubble is going to burst and all of that. But there's no current sign that from my view, that things are slowing down. That being said, I'm not a financial analyst. I really look at this from the market analyst perspective, and I'm not giving you investment advice. Whether you're an investor or a startup, I'm not telling you whether you should be doubling down on where you should be putting your chips on the table. I'm looking at this more from the impact that it has on the market overall, the impact that it has for the buyer, the impact that it has for the startups and scale-ups and tech providers that I work with from a competitive perspective. And of course, I do work with investors as well to help them understand what's coming and how these trends are impacting things. But it was just I'd say when the pandemic started, I was wrong at first based on all of my muscle memory from other major financial impacts and the economic events. Expected there to be some brakes hit on investment, expected there to be some darker days for a moment for startups raising funds. But because of a few factors, that never happened. I predicted a slowdown, especially in that initial quarter or two during the pandemic. And I was proven wrong. In fact, things accelerated. And as you've seen, we've set record quarters again and again. So why this spike? Why this spike this quarter? Again, I'm not a financial analyst, but anywhere you look for answers, you're going to come up with the first item on this slide, which is money is cheap. Money is really inexpensive right now. Mercer put out a report. The title was "Dry Powder Meets Low Interest Rates." So you've got a lot of not the usual players, right? VC used to be driven by a few really, blue chip, we'll call it, or top shelf VCs, Sand Hill Road and the Bay Area. That in the HR tech market, in the work tech market, we always had some less than usual characters, right? 10 years ago, 5 years ago, we rarely attracted like an Excel Partners or a KKR or Index Partners or some of the more well-known Bay Area VC firms, and folks that were a little bit more focused on work and HR. But what's happened now is we've had a decade of growth with startups and with in the market in the HR tech space, and that there was an existing trend. And I'm saying here, I don't know who said COVID is not a creator. COVID was an accelerator on a lot of trends, but I like that quote. COVID didn't create the trends that we're dealing with right now. Things like hybrid work existed before. Things like remote work existed before. Communication and collaboration, all the areas where we've seen dollars going. We have, substantiated trends for that over the last few years, both in what's being adopted by HR and in where investment dollars are going. And we had been drawing more attention of those, investors across the board. And then when COVID hit, it shined a light, as it has, and it accelerated trends like hybrid work, employee experience. And it wasn't just about COVID, but at the same time, mission-driven initiatives, diversity, inclusion, pay equity, based on not just COVID, but other things happening in our world, started to shine a light on the need for more innovative solutions, at work. And all of these things, money is cheap. We've had a long period of growth and success in work and HR technology, and then COVID accelerated it. So it was almost like I guess maybe perfect storm is a good phrase to use, that just seemed to come together here in over the last few quarters, but certainly in Q2. Now, the other thing that I would say is anybody tracking this is tracking based off of announcements, based on information that's shared. There's no requirement to share it, so there could be more. I've got a highly automated process that does not use, it uses all the usual suspects, but I've had to branch it out to about 70 sources. But because we're dealing with announcement flow and not, like SEC data, there's the potential that some of the deals, there was a little bit of hedging that pushed a lot into this quarter. But given the path that we've been on, I think that probably had the least impact of all of the factors. So it didn't even make the slide. I'm not seeing any new questions as we branch into more of the actual data. So the other thing that is really worth talking about as far as why all of this attention, it's the market opportunity. So this is a slide that I've used every quarter for the last few. I track total addressable market and serviceable addressable market. One being, if what's the total potential for HR technology by, I don't know, 8 or 9 categories, and the other is what's available now, right? So serviceable is what's available, what's turning over. That number tends to stay at about 32%. So that's how these numbers get generated. I use a PEPM model. That's the way the world works: price per employee per month, and an annualized contract basis, and all the numbers are vetted constantly with my advisory clients and tech providers across the board, as well as buyers and users of the technology. So I'm able to really tweak this based on what's happening in the market, and I'm able to branch out the categories as needed. So the total addressable market, with a $390 billion global market for work technology, it's a big space. It puts the serviceable at about 125 billion. Those are big numbers. It's a big market opportunity. And when you think, how could it be that big? Well, think about payroll, global payroll, benefits, elective benefits. Think about some of the more required capabilities needed in talent acquisition. These are capabilities that are required by most businesses of almost any size. So whether it's using job boards to find people, or sourcing tools to find people, or elaborate artificial intelligence driven technologies, I've given you a spectrum on recruiting there that goes from SMB all the way through to the largest of enterprise. You think about payroll, that's everyone. Everybody needs a payroll system. Everybody needs a core HR system. So this is it's a big market, and we're really coming into this next wave of HR technology and work technology. So the one thing that COVID has really pulled the wool back on is the fact that we've got a lot of legacy platforms that aren't the most usable from a user perspective. They're not the most, they don't play as well with others from an integration perspective as we see in other market segments in the B2B space. So there's a lot of churn that's expected here, and every analyst that's looking at different categories in work tech is anticipating, I'm seeing anywhere from 30 to 70% turnover in systems, depending on which category we're looking at. So investors are seeing those numbers. They're seeing numbers similar to this, and this is opportunity. Okay, so let's narrow down what happened in Q2. So this was in some ways, very consistent with what we've seen through the pandemic as far as how things broke down. But it's very different than what we've seen prior in the 3.5 to 4 years prior. What's the same from a pandemic perspective is HCM seeing the lion's share of the capital that was flowing into the space. And when you think about some of the the calculus that would be used from an investor's perspective, and from buyers' perspectives, you're in a pandemic and you're making selective. $1 billion flowing into talent acquisition is nothing to sneeze at. $1 billion flowing into talent management, nothing to sneeze at, but just relatively speaking, I'm making fewer investments. I'm spending less on TA tech, but I'm really concerned with collaboration, communication, core systems, data, being, the safety of my employees. I'm planning for a return to the office. So how am I going to schedule this, track this, engage employees? And some of those things will fall into other categories, but in large part, it goes into HCM. We've also seen a revitalization around benefits and wellness and mental wellness. That all falls under HCM subcategories. The average deal size is always significantly larger in HCM. So this wasn't surprising, but if we go pre-pandemic, and I'll show you the data pre-pandemic, it would be more of a head-to-head. Quarters don't make. It's not a great way to look at trends from an investment perspective. But we roll it up every quarter. But if you look back even, year to year, you see HCM and talent acquisition usually right at the same level. A couple $100 million here or there advantage one quarter or the next. But this is sustained, and you'll see how on an annualized basis, HCM has just really pulled out ahead of talent acquisition technology. Just want to be sensitive to everybody's time. Okay, so let's drill it into the subcategories. So categories, there are three: HCM, talent acquisition, talent management. I'm not going to educate everybody on what those mean, and anybody attending this webcast probably understands that. The subcategories get into, as there are about 20 that the investments are tracked against, and we're looking at, in this case for this quarter, the top 6. And, things like benefits as a subcategory of HCM, core HR, like HRIS, core HR systems versus payroll, if you've got a payroll system, wellness, and marketplace job boards. So you can see, learning is a talent management solution. And this chart as well is fairly consistent with what we've seen through the pandemic. We've seen, benefits and wellness show up on this. All of these categories showing up. Marketplace job boards dipped off the chart early in the pandemic, but it's been back the last 2 or 3 quarters. And marketplace job boards, surprising to some, if you've never attended one of these before, it may be surprising to you, but marketplace job boards are still the number one category year in, year out for HR technology. Now, this year that may change, but there has been a resurgence of marketplace job boards, looking at new models of work and so forth, and new models bringing those. The matching of candidates to jobs to the market, incorporating things like learning, incorporating services, incorporating new work models or non-traditional models like freelance or contingency work, etc. The things that jump out at me when I look at this category list: benefits, as I mentioned, there's been a revitalization around benefits. A lot of this is going after new segments. So going after small and middle market companies and giving them more flexibility and the ability to compete with benefits, with bespoke benefits programs, while they're competing for talent. Some of it, though, is looking at more efficient ways for larger enterprises to do the same, to provide a better experience for their employees. I mentioned the marketplace job board side of things. Core HR is definitely what the emerging tech players there are bringing to market is a more usable platform, a more extensible platform. So more open APIs, more integrations into everything, better analytics. What we're seeing on the payroll side, to skip learning for a second, is global payroll is really driving a lot of this. So payroll is another category that surprises a lot of folks because, I think most people think we would have nailed that decades ago, but payroll is a big driver of growth in HR technology. That's where the original HR technology players came from. It is again one of those business requirements. Every company needs payroll now. As we've delivered on the world is flat ethos, and companies are hiring remotely, hiring hybrid workforces, hiring globally, even small and middle market players. There's complexity that comes with being global in being compliant globally. So it goes all the way down to a local level. It's local, it's province, it's state, it's country, and it shifts. It's not as to call the U.S. system forecastable gets a little bit of a chuckle, but it's kind of you see things coming in the U.S. and other parts of the world. not so much. And in Western Europe, you see things coming. But if you're in some emerging markets, things are changing all of the time, and you need systems and people on the ground to keep the systems compliant and to navigate those. So global payroll and models like employee of record and PEO in the US have just had also a resurgence in providing an opportunity for smaller and middle-sized and high-growth companies to leverage these services and technologies. Wellness, I think we've talked a lot about wellness. The market talks a lot about wellness. It's been a trend for years, but especially mental wellness and more recently financial wellness that has taken up a little bit of the stage as well. But mental wellness through the pandemic became, one of the CEO's top items in shepherding the workforce, shepherding their business through the pandemic. And so we've seen a lot of big rounds, a lot of massive valuations in the mental wellness space. And we've seen a little bit more attention. Sort of they were taking all the oxygen out of the room, and they're sharing the stage now with some of the other wellness providers around physical and financial. Skip over to learning. The reskilling, upskilling, internal mobility conversation and trends that existed pre-pandemic are just even more highlighted today as are we out of the pandemic or coming out of the pandemic or getting back to the office or looking at the future of what normal may be. We're focused on skills and talent marketplaces. And so a lot of focus on learning. Any internal mobility, upskilling, reskilling initiative that doesn't have a strong learning component or integrated player is going to fail, because that's the essence of upskilling, right? So those are the subcategories. In the report, I think we don't go too much further than this, but if you have access, if you've become a data member, you see all of the subcategories and all of the investments and all of the investors there as well. And that's all at oneworktech.com. Okay, so how does that compare, to 2020, where the pandemic started? You can see the missing. The story in 2020 was collaboration and communications, which wasn't a big player in Q2, but had been even pre-pandemic. So things paused there. Again, a quarter is a blip. A quarter does not a trend make when it comes to any of this, but it's interesting to look back at last year and look at this quarter and how things compare. But the rest of it all looks, fairly consistent with what we've just seen from a subcategory perspective. Internal mobility is, there was a time in my life, I'm old enough to remember, when $173 million was a lot of money. But comparatively speaking, for all of the hype and buzz around internal mobility, we don't have a lot of solutions that are bespoke to internal mobility, focused on internal mobility. So that's interesting, not that surprising, given that we've got a lot of traditional learning and talent management capabilities in the market, and a lot of buyers think that way. And then we have recruiting, applicant tracking systems that are focused on matching talent, whether they do it well or not is another conversation, but managing the workflow of getting individuals into jobs. So that is, there's been a lot of, I think buyers, frankly, every buyer that I'm talking to, every user, every practitioner is really just getting their head around internal mobility. The hype that Amazon and others created in 2019 around their initiatives were really just pebbles in the ocean on even within those environments. The money invested and the initiatives were fairly small, relative to the size organization that like an Amazon is. But this is a thing, and this is something that most companies are still getting their head around. Does it sit in talent acquisition? Probably not. Do they have a big seat at the table? Yep. Does it sit in talent management? Is talent management going to be replaced by employee experience, and where does learning go in all of this? Maybe. So that's what everybody's getting their head around right right now at this moment. And I expect 2022 to be a year where solutions mature. We'll see some interesting partnerships, probably some acquisitions that create solutions in this space, and some new players that may emerge and that are emerging now that may have a big impact on internal mobility. The 25 largest deals of Q2, it's more intriguing than the 25 smallest, I guess, but the largest being the biggest rounds. And we did have a number of unicorns. I've got a slide dedicated to them, and I think it's the next slide. So interesting to see a job board be, again, this is not WorkRise's first time as the biggest deal of the year, or of the quarter, I should say. WorkRise, formerly known as RigUp, rebranded to focus on skilled labor and not just oil and gas. That was what RigUp really focused on. They're bringing more services to the table than just ads and candidates. So it's a true marketplace. They've raised a ton of capital. We'll talk about valuations and unicorns in a moment. And you'll see that if you look at the subcategories, of course, it can, one mega round can drive a subcategory, can launch it into the biggest, one of the biggest categories in a quarter, one or two mega rounds, and it can look daunting. That's why I say I don't look at the quarterly stuff and react. I look at how it compares to, quarters in hindsight, and how it relates to what I'm seeing and hearing with buyers on the advisory side today. So this is in the report. You have access to all of this. Again, access to all of the deals, and biggest, smallest, and through the VC database at oneworktech.com. Okay, so how about those valuations? There were, I always count them to make sure I get it right. I'm not confident about so many numbers rattling, but 9 unicorns last quarter. I think it was 7 the quarter before that. So 16 unicorns minted this year. That's not to say we only have 16 unicorns in the HR tech space, but these are the vendors who moved into unicorn status. And I would say the ones that are really interesting to me, from a WorkTech perspective, Safety Culture out of Australia is all about helping companies plan their workspace. And you've got thinking about the return to work. And this wasn't a response to the pandemic. They've been around for years. And so they just happen to have a solution that, again, interest in their solution was accelerated, I think, through this pandemic. And as we look at a hybrid return and look at the decisions companies are trying to make about their space, about how they manage, about different spaces and different locations, about all of their commercial real estate, Safety Culture is interesting, and it's definitely WorkTech. Loom is asynchronous communication. So we're talking about one directional communication versus the kind of distractions that we see with Slack or Teams or Jira or systems that are, personally, I find them very distracting. And Loom is one of the early players on this trend of asynchronous communication. Is that the way forward? Is that how we'll be communicating and collaborating? I don't know. It's early. Is that the way people work? I mean, that's a lot of the biggest ideas and a lot of the funding that flows into this space over. I've been in this side of the market for 20 years now, either as a tech provider or an analyst. And you see a lot of solutions like this get a lot of buzz, especially coming out of Silicon Valley, a lot of really innovative thinking around these solutions. But does it get adopted and does it get used? Sometimes yes, sometimes no. We'll keep an eye on Loom. I think it's definitely an interesting approach. Deal is one of those global payroll providers, international payroll, with I believe they have the employee of record model. So I'm just finding the global payroll thing really interesting right now, and there are a handful of players that are going after this. Like a Deal is more of a payroll provider, payroll system, like a Papaya Global, who was one of last quarter's unicorns. And then you've got Amidas out of Ireland, who's more of a layer across all of your HCM systems and facilitating payroll through a network of global partners and people on the ground, and more of a pure enterprise play. Really interesting things happening in that space. And, payroll is kind of cool again, if I dare say that. Eightfold is, started out in talent acquisition and sourcing, raised a ton of cash, and is they're really going after internal mobility, and even more so, I think, going after the space that their partners play in, the ATS and platform play around talent. I think it's inevitable now with the money that they've raised and the expectations that investors will have on them. I don't have any inside information, but I have seen their product in play in an environment being used as an ATS. And I think, we've seen this movie before. We've never seen it end well for those that are going after the system of record. But, again, this is a new wave of work technology. So, I'm not putting any bets on in either direction. I want to watch momentum and adoption more so. Another interesting one, and then I'll get to the valuations, is Handshake. Handshake being an early career, part job board marketplace, part career center integrator. And they've raised quite a bit of capital. Obviously, they've become a unicorn, so they have a big valuation, over $1 billion. It's interesting. I can say that from an employer side of things, from a buyer user side, I'm hearing about Handshake, more and more. So the early career space is one where I think employers see an opportunity to access talent, groom talent, and more so than ever. It's always been that way, but it's also a place where they can cast a wider net and look at a more diverse candidate base. And that's a very good thing. That's something that a Handshake, companies like Handshake base a lot of their value proposition on, and others in that category as well. So I think Handshake's one to keep an eye on. I would also keep an eye on some of the moves recently, like Way Up and Yellow merging. I would look at Canaries, an earlier stage player who is more of a diversity and inclusion focused solution, but definitely branches into that early career side of things, given employers' focus. So something there, and interesting things coming out of this list. They're all interesting because, they became unicorns. But the thing that I had a conversation on a webinar about a month ago with the folks at HireClicks, and we're talking about the valuations. And, one of the big questions I've had, my phone has rung, still does. It's not just email and text at all times, and I've had people asking me, like, do you think the market can sustain these valuations? And, you saw the total addressable market slide. It's a big market. And I'm not going to call out any of these specific vendors, as fun as that might be to do, but I'm dubious of the valuations in the space, given whether it's the revenue run rate or the traction, however you measure it, that these players have. And I think the next 2 years we'll probably see some vendors go the way of brass ring, like whatever happened to them, and see some acquisitions that are less than exciting, given the valuation and the amount of capital that's flown into these. I think we'll see some interesting players emerge. I think we'll see some platforms emerge. I think we are in a new wave of HR technology, but we haven't seen. When you look at the existing categories that these players are in, I think about adoption, and I think about the ability to ride through economic cycles. And, I come to categories like job advertising. That's why that space is, the rumors of its death have been greatly exaggerated over the years, right? I look at payroll, I look at benefits. These are must-have capabilities. I look at learning. I look at the challenges that we're up against in a new workforce, new demographically shaped workforce, new focus by employers as to what they're prioritizing in their workforce. And I think learning is another category that's going to explode over the next year or two. I look in some of the other categories, and I just have a hard time seeing platform players emerge from some of these adjacent categories, adjacent to some of the core recruiting, HR, and talent management capabilities where the platforms exist now. I could be wrong. I hope I'm wrong, but that's how I see it. No new questions, so I'm just going to keep moving along. So what about, if a quarter doesn't a trend make, what about the last 4.5 years? I mentioned earlier that you can see, just so you can see the number on talent acquisition there. I mentioned earlier that this slide used to be more neck and neck pre-pandemic between, talent acquisition and HCM. And the pandemic has really, the shift to a focus on core HR, on collaboration, communication, benefits, wellness, has driven a lot of mega rounds, a lot of investment from really through all stages of investment. And just pushed HCM way out ahead of talent acquisition. As the market changes, as we get back to work, will we see talent acquisition have a run like HCM? That's hard to say. And again, I'm not a tea leaf reader. I'm not a financial analyst, but nothing that's happening in the space today suggests that. Talent acquisition always has a much lower average deal size and tends to come at, we see a lot of apps emerging in the space that then get rolled up into existing platform players or become, a really thin slice of the market share pie over time. You can see that the deal count in talent acquisition is actually higher than the deal count in HCM. Again, average deal size being much, much lower in a talent acquisition or recruiting versus HCM. Okay, I'm going to be really respectful of time and move quickly here. When we look back, so over, it's almost a decade. We're just a couple quarters left, and I can say I've got a decade, 9.5 years of data. The orange, oops, I didn't color 2021 blue. I'll say that's because we're only halfway through and I wanted it to stand out. But 2012 through 2016 would be using public sources, data that was reported. It's also about the time that I realized, I think I'm seeing a lot more VC than what's being reported on a monthly, quarterly basis, and started tracking, and where I think I've proven that, and developed a system and a process for doing that. So the blue stuff is all my data, and so you can see that outside of 2017, which may have been a dip caused by, my sources have definitely extended, and my ability to automate, I'm automated now with manual sort of intervention. And that has increased in the last year or two. So that 2017 blip, is that because there weren't as many sources, or it could be a thing with my data, granted. But when I look at the public data, I was reporting more than what we were seeing in the market. So I don't know. The answer is it is what it is. And from 2018 forward, I think it's the best data that's in the space, but an interesting view nonetheless. And I just can't get over how we're only 6 months through 2021 and a staggering. It's already an incredible year from this perspective, with 6 months left to go. Okay. So really at the end, I've mentioned the database a couple of times. Market insiders are basically newsletter subscribers and folks that get access to these types of presentations and the reports. There's a data access level of membership where I use a Power BI interface to expose all of the deals, all of the data, investors, categories, subcategories. It's tracked by country, et cetera, and it can be you can look at HCM in a specific country or look at specific investors or timeframes, et cetera. So it's a data as a service membership that's provided, and it's all at oneworktech.com under memberships and data access. There is a lot of the vendor perspective that I bring here. You can find on HR Tech Book, another property. It's a directory of vendors that there are no ads, no ratings. Anybody can add a listing. Vendors claim listings. All are approved. There are 3 analysts involved. WorkTech, Aptitude Research, and H3HR. And so that all gets vetted. Bringing you more data and doing this again in a quarter. Thanks.